Good evening and welcome to another MTV Community Forum. Welcome wherever you are. I'm your host, Byron Campbell, and our co-host is, of course, Chris Diali. Good evening, Chris.
Good evening, Byron. Good evening to all viewers. Happy to have and to be around again for another Wednesday.
Yeah, it's amazing how fast the Wednesdays come around, Chris. You know, it's like as though my life is getting shorter. Is it?
Chris, when things happening good, it does happen fast.
There's a lot happening, Chris. Firstly, the first thing I want to touch on, Chris, is, of course, government and opposition cooperated to pass the Oath of Allegiance bill. It is now, the allegiance is now to Grenada. The oath of Grenada is no more to the king. That's a big deal, and I think it's important that we compliment Dr. Alexis, Francis Alexis, and the Citizens for Constitution Reform, that grouping, you know, because they are the one that did the research, the investigation, and the work, and that's important. So we want to congratulate the grouping for this. But it's time to revisit our Constitution in general, because the one we have was not determined by us, it was determined by Europeans. And Chris, but the big news, no more oath of allegiance to the king, it's to Grenada. Big deal.
Yeah. Well, I supported that move. I thought it was a positive move. I don't see why we had to give our oath of allegiance to the king and his heirs or his successors, whereas we could do it to the state, both for the oath of allegiance and for the oath of office. So I was happy about it. I still have some folks that believe the 2/3 in Parliament is a violation. I don't know if they're going to take that to court, but based on what was said by Dr. Alexis and his group, it appears that, and the government seemed to have sided with them in that there was nothing nefarious going on with the Constitution or breach of Constitution, because Schedule 3 doesn't necessarily need a referendum to go to the state. So, I mean, I think it's a positive thing. I think it's a step. If you watch the other Caribbean countries who have done it, they are moving slowly into, you know, eventually relieving us from this thing about having a head of state be associated with the crown. And that is something that we also had to look to see how we could move that as well.
Yeah.
I believe. I mean, whether it's republic status or whatever we had to get, we are independent state for 51 plus years. Why not?
It's important. So kudos to the grouping, and I know their work has just begun.
Yep.
So we expect more from them.
The wider constitutional
Chris, the
changes.
big news in Grenada is, of course, Active 25 Trade and Investment Conference concluded this yesterday, Monday and Tuesday. Yeah. Over 1,000, or in the vicinity of 1,000, that's the report, participants. Good for Grenada, immediate benefits for the hotel sector, food, transportation, entertainment. Great for us, you know, so I think that's a big deal, and kudos to that. And it seems from the report that it went well, the organizational part of it and so forth. So great. We heard also, Chris, a number of things here that we heard that there was in the pipeline some 2.5 billion US investment from the bank going forward. That includes energy in Suriname and Guyana, sports in Barbados, infrastructure in St. Kitts, education in Jamaica. So, of course, it's a big deal. That's important. For Grenada, the big news, of course, was, well, there's two things there, Chris. One, you have the announcement that from Dangote, that is Mr. Dangote, chairman and CEO of the Dangote Group, announced the establishment of a Dangote Orama Center. Orama is the president of the bank, okay, the outgoing president. And they are setting up a institute of, how's it called? Center of Excellence in Grenada. But this is preliminary. We don't know exactly the details of it. But it seems that this is set up to, for purposes of Africa-Caribbean collaboration, policy, training, and that sort of thing. So it's we'll know about it. But the bigger news there, Chris, coming out was the announcement from the president of the bank that Grenada was okayed, they had approved some $250 million US, whether it's co-financing or not, for the establishment of a tertiary hospital, Chris. Tertiary hospital. Big news.
Well, let me start off by saying that I believe the conference has to be welcome to the Caribbean and to Grenada, in the point that from the standpoint that when you look at the traditional sources of income and investment for us as countries, and especially Trump 2.0,
Yeah.
US aid is no longer in existence, and a lot of these funding agencies that will give you grant funding, and even to some degree, you have the World Bank, you don't know what's going to happen with the World Bank, and so on. So these traditional sources of income for Caribbean countries in particular is no longer as it used to be. So they have to look otherwise. I mean, for our survival and for what we want to do strategically for our people 10, 15 years from now. So I think this is a good move strategically. The government of Grenada hosting is also a good move in that you get to know people intimately, and you get to know who are the big players and establish contact, so that when you pick up a phone, you know who you're talking to face to face.
Yeah.
So I think that is good from that standpoint. I believe for us, when we talk about the announcements and what has been announced, I believe one of the issues is we don't have a lot of detail. So if we were to start with the Polaris project,
Yes.
the tertiary hospital,
Yeah.
that is almost $750 million
Yeah.
to do that. I don't think that will be grant funding. It has to be loan.
It's a loan. It's a bank, Chris.
Right. So
Yeah.
if you don't have the details of the loan, what is
Yeah.
the interest, what is the repayment period, what is the grace period, all of these details, and how you're securitizing it is another issue. And of course, the immediate impact is going to have on our debt to GDP, because 680 million thereabout EC dollars is not a little bit of money to add to the debt load that we already have. So those are questions, I think, as we move forward with these things.
Chris, I can answer those questions easily.
Yeah.
It's a joke.
So I must indeed say, in terms of the organization, I think all the reports coming from the conference and the people
But Chris,
attending.
before you go there to the organization, let's stay with the hospital for a moment. So it's a tertiary hospital. Tertiary hospital is the third level of treatment. So you have primary hospital, you have secondary, which is like our general hospital, and this is tertiary. This is where you get specialized treatment. That's where you get high tech. That's where you get top surgeons. That's where you get the top. So the hospital is being marketed or built as a institution to serve, because all the accommodation and all these facilities designed for overseas persons. In other words. So this is I must admit, my information, my research show that tertiary hospitals or tertiary health facilities is a growing industry, yes, in North America and in Asia in particular. But it's a very specialized and high-end sector. So knowledge and contact with health institution is very important to be successful. Understand that too, that there's very limited link between health provision for Grenadians in terms of this particular facility, Well, it seems that way. I don't have the details, but when you read about Project Polaris, that's what you're getting. The accommodation, the staffing, and all of these factors are built into it, because even from the management point of view, it is the Mount Sinai Hospital that's providing all the management and resource input at this stage, not us.
Yeah, and that's the point. We're not sure. This is a PPP arrangement, private-public sector arrangement,
Right.
and the issue is
Explain that, Chris.
Yeah, well, you're here in a PPP arrangement. What you have is the public sector and the private sector coming together to execute a project and to do various stages of the project.
Yeah.
Of course, once a private sector company is involved, it is going to be for profit. It's not for loss.
Yeah.
So, you need to understand the details and how it's going to operate, how Grenadians are going to benefit. But what I can say, at a tertiary level hospital, the major issue is cost. And I can understand the pitching this as to get foreigners to come in. Yeah. And specialized care, health and wellness is being spoken a lot about it in this.
That's correct. It's a growing industry.
Yeah, but your cost has to be significant. We have already competing entities in the region.
Yeah.
Colombia, you have Ecuador. All of them are doing the same set of stuff, but they are much cheaper than the US, for example.
Private sector.
Right, and the issue here is, how are we planning to pivot the project and to pitch the project so that we get our fair share in terms of that environment? Yeah. So I think there's a lot of things that need to be explained. We don't know. So Chris, we don't know. So
we have to go further into this. We need to bring the persons concerned, the managers of this process to explain, to talk about it some
But
more.
I want to say one thing at tertiary
Yeah.
level care. Remember, tertiary level care will come for, you're not sure if they're doing oncology unit to deal with cancer patients. We have a serious issue with cancer in our country and
Yeah.
in the region. ICUs, to run an ICU is not a cheap thing.
Yeah.
And what other specialized services are coming? Is it going to be, to deal with the diseases of hypertension and diabetes and all of
Yeah.
that sort of thing? So, again, there's a lot that we need to know. How are Grenadians going to access it and at what cost? Yes, foreigners could probably, and if the intention is to bring insurance companies from the US, for example,
Yeah.
to partake,
Yeah.
and to sponsor their patients and the people when they come here, fine, that could work.
And
to a
also,
certain
how would the
degree.
health insurance, national health insurance, how would that? But the critical
Correct.
question will be, Chris, that how do you balance quality care with affordability? And that's a crucial question
If
to
it's
be
a tertiary
answered.
hospital
So-
and it's training, again, you have to understand the SGU,
That model.
that model and
Yeah.
what that brings and how much doctors will be going through there to do their training. I don't
Yeah.
know. We don't know.
We don't
So we
know.
need to understand and what has been presented so far.
Yeah.
But
Yeah.
I mean, the indirect benefits, Byron.
Yeah.
If the hospital is built and is built in the area down in Calvini, there we
Yes.
call that again.
It's about 80, 90 acres of land there.
Right. So
yeah.
if it's executed there, the spin-off for the communities in the area could be significant.
Of course.
Right. People gonna need places to stay. Your real estate values will go up and all of that. So there's positive spin-off from that
Yeah.
if it's executed
Yeah.
well and it becomes a model that can work for the
So
country.
let's see it, Chris.
So there are some positive
positive
sides that I need to
aspect
look
to it.
at as well.
Chris, I understand that the traffic arrangements for the conference was a bit not helpful for local motorists.
No, well, Byron, you're being kind. It was terrible. It took me, I left home at 4:45 on the Monday
Yeah.
to get down to SSU, and it took me more than, I got there at 10 to 6. And what was annoying, you didn't see a police in the area of Grandans Valley, Republic Bank, and Lansapine Junction.
Yeah.
No police was
Yeah.
available to say, well, let us see how we can ease the congestion. And then you had police trying to get
Yeah.
the people who
Yeah.
are in the conference, trying to
Yeah.
get them through the traffic, and they can't move. Your siren on, and where you going? You can't move. It was gridlock. And that's there for more than an hour. And I mean, that you knew they had a conference coming. The conference was more than how much months advertised.
Several months, yeah.
You knew that the volume of traffic on the road in that particular area, Montrouge area, is going to be significant. Come on, man.
So better planning, Chris,
Well, I mean-
basically. Chris, I heard the CEO of IMA, the investment citizens, what do you call it, IMA, Chris?
CBI, IMA, yeah.
IMA. It's Thomas Anthony. He was saying that Grenada would be focusing on marketing the CBI program in West Africa from October. The question is this good or bad? Would we get from the position of the European Union and Trump 2.0? Yes, this would increase economic investment, but should I be concerned about the U.S. and other countries might reassess their diplomatic relations with Grenada, considering the potential influx of new citizens? Is it okay with you that we?
Well, if you're teaching a man to fish,
Yeah.
you give him more appetite to maintain himself. But if you're going to catch a fish and bring it at you, you ain't getting nothing in essence. So here it is that we developing this relationship with Africa.
Yeah.
We have to try and exploit it in all ways possible. And let me just say that applications from various countries in Africa have always been part of the IMA program, stroke CBI. So it's nothing new. The focus, of course, to market in Western Africa is where they have some of the more affluent countries, Nigeria and Ghana and so on and so forth. So they may be able to explain to people and show them the attractiveness of coming and investing in Grenada. I see nothing wrong with that. Whether it will have implications for the U.S. also, I don't think so. We're not threatening the U.S. or
So the
anything.
U.S. might review its visa policy for Grenadian citizens, potentially imposing
Why?
stricter requirements
Why?
and
What is
limitations.
it? What is the security fallout from getting Africans to come and invest here? Why? Why do they need to review the visa requirement?
But that's what they've been doing. That's how Trump 2.0 has been operating.
No, they expressed
And the
concern-
European Union.
The European Union.
Yeah, in
not
particular.
the U.S.
Yeah.
The U.S. have a
Yeah.
lot of people that
Yeah.
are applying for
That's
CBI
correct. In fact, I
citizenships.
understand this is where the majority of the applications
Correct.
are coming
So it's
from.
not the U.S.
Yeah.
It's probably Europe, because
Yeah.
Europe not happy that a lot of the investment funds flow
Mm-hmm.
is now moving from them to us in the Caribbean. So I see nothing wrong with that. The issue is how you may question how long it could continue to operate. Hence again, the positive thing of developing a relationship with African countries. There may be a lot of high net worth people there that looking for another option.
Chris, that's all the time we have. We have an interesting program coming up. We have, they'll be launching in Grenada a credit bureau as early as next week. And we have with us the CEO of the Credit Bureau and representatives from the Bankers Association. So viewers, they'll be joining us immediately after the break. So stay with us, we'll be right back.
Fit for Life and Allied Laboratories, providing quality care and expertise. Fit for Life and Allied Laboratories, see our in-house doctors and our pharmacies. Get expert care and quality tests. When it comes to your health, you deserve the best. Fit for Life and Allied Laboratories, we're taking care of Grenada.
Summer is officially here, and MTV and Fusion FM is ready to bring you all the elements of Spice Mass with Carnival Pulse. From July 28th to August 8th, 10 a.m. to 12 noon, it will be vibes and musical energy on television and radio. Carnival Pulse will get you ready for the most anticipated summer festival. Something pulsating is about to happen. Don't miss out.
Yeah, okay. Chris.
Welcome back to Community Forum, viewers and listeners. As we indicated earlier, this evening we want to talk about a new organization, a new entity that will be launching in Grenada in the first week in August. And the company is Everydata, ECCU Limited, I think is the name of the company.
That's correct, yeah.
The CEO, going to correct me, Mr. Van Reinders. Mr. Van Reinders, I hope you're hearing us so that we could get the viewers exactly what is going to happen at this bureau and all of the other things. So could I start with Mr. Van Reinders? I hope I'm pronouncing that properly. Mr. Reinders, you hearing me?
You are indeed, sir. And good evening to you and the viewers. Thank you for having us.
So Everydata, interesting name. Everydata empowering smart decisions. Nice. Tell us what is a credit bureau, so the average person could understand what is a credit bureau and the functions of a credit bureau.
Yeah, absolutely. So Everydata is an organization licensed by the Central Bank, which is the Eastern Caribbean Central Bank, to operate within the ECCU with a mandate to essentially collect and to protect credit-related information from financial institutions. With our primary function is to consolidate that information into credit reports and make that available to financial institutions, which they can then use at the time of doing a loan assessment or a loan application to use that information to make a more informed decision about whether they're going to grant the credit, yes or no. So essentially, one can say that we are a regulated institution that facilitates the effective information sharing between financial institutions. We'll talk about the benefits in a bit and why that's necessary, but in a nutshell, really, that's what we are. I'm based in Antigua. Our head office is here, and then we cover all of the ECCU countries from Anguilla all down to Grenada.
So this is something I know the ECC, East Caribbean Central Bank, ECCB, have been talking about for a while in terms of improving the quality of the loan portfolios, reducing the NPL ratios and non-productive loan for financial institutions. But does this bureau meet and I would apply the data to both bank and non-bank institutions, because the credit union is a serious player in the financial space in the ECCU?
Yes, absolutely. That's a good point. To create some context here is that the Credit Bureau operates under a very strict regulatory framework. We'll touch on that in a minute. But that regulatory framework mandates which institutions need to participate in this initiative, right? And so it says in Section 27 that all licensed institutions, which is the commercial banks and non-banks, credit unions, microfinance, insurance companies, etc., are mandated under this regulatory act to share the information with the Credit Bureau. There are also secondary data providers like development banks and a few others, utility companies, etc. But to come back to your question, yes, is that this broad range of institutions are required under the act to share information with the Credit Bureau. And
the associated question with that, you are responsible for every country within the ECCU in developing this service to non-bank and banking institutions, the financial space. The question here is, how long would it take for you to build that database? And of course, the security of the database that we are going to be, because this is personal information that is going to be shared across platforms and across countries. So the issue here is, how long would it take your company to develop the database, and the security arrangements around it?
Yeah, this is a very broad and very important question you've just asked. So I'm going to try and answer it in some parts. Firstly, the Credit Bureau, we've actually been operating in the ECCU now for going on three and a half years, getting the database up and running, building the infrastructure, making sure that the legislation is enacted in all of the countries, because the central bank issued what we call a harmonized credit reporting bill, which was then passed down to the different governments, such as in Grenada. The Ministry of Finance then had the act gazetted, proclamated and enacted, which meant that the Credit Reporting Act became law in Grenada. And so since that was enacted, which I think Grenada was actually one of the first countries in the ECCU actually to pass that legislation. So it's taken us some time to get to this point, working with the financial institutions, getting data ready, etc. And we're now at the point where we are launching in Grenada from the 1st of August, and this is where we do the public awareness. So it's taken us some time to get to this point. Now I want to take a step back quickly and talk about the information that's being shared with us, because you touched on a very, very important point, and it's something we want to ensure that the viewers understand, is that Every Data is a data protection company, essentially. We are mandated by the central bank and audited by the central bank to protect this credit information that is shared with us under this very strict regulatory framework. Our systems comply with international data security standards. We are ISO 27001 certified, and we are audited by the central bank on an annual basis. So as far as the information that we host is highly protected and secure. And then I want to talk about consent in a minute as well, not to digress too much from this, but just to give the viewers, peace of mind that nobody can view your information without your written consent. So yes, even though the institutions are required to share the data with us, the only time that an authorized user can view my credit report, or that one of a consumer, is if you physically give them written consent, and only then may they do a credit check, and only for that one transaction. So when the loan expires, or you pay up your loan, for an example, your consent falls away as well. And And so if any institution were to do a new credit check on you, you would have to give them consent. And there are mechanisms in place where consumers can view that information, their own credit profiles. We'll talk about that. I don't want to digress too much.
That's right.
But I hope I covered your question.
Yeah, we'll get into more details. Ms. Joseph from Republic Bank Grenada Limited, could I ask you a question here and bring you into the conversation from the standpoint of you are part of a bank that is going to be issuing and inviting customers to come and take a loan and set up a loan with you. When this bureau gets going, it's going to be Mr. Joseph. I said Miss. Let me apologize. Mr. Joseph.
Yes, it's Mr.
Mr. Golden.
My apologies.
Mr. Golden.
Right.
Right,
So
right.
the
But
issue,
could you
my
just repeat
question
that
to you
question
is,
for me, I lost you for a bit.
yes, so Mr. Joseph, my question to you is, as a bank that is offering, loan, different types of loan, different program, different products in your loan portfolio, how does this help the bank in terms of its quality of the loan portfolio and the cost to the customer? Because the bank, whether it is you or the other banks, will have to be paying for this service. So is it going to be a situation where the transaction cost to negotiate a loan is going to become higher for the customer?
Okay. Well, your question has two parts. So let me start with the first one. How does that help with the quality of loans we want to issue? That was the first part, correct?
Yes, yes. Mm-hmm.
Right. So it will help us because we need to know who our customers are. We need to know who our customers bank with and what's our customers' exposure. Oftentimes when persons apply for a loan, they tend to neglect some of the other debts that they have, and they just put forward the good things. But we need to know the credit history. How are they paying at other institutions? Can they afford the loan? Sometimes people want loans to purchase things that are not very necessary and they can't afford it. So that helps us to make a better decision whether or not to grant the loan to that person. Also, well, as it is now, if we are granting a loan, most likely we would have to go around to the different institutions, whether it be by telephone, whether it be by email or physical mail, to just get an idea of how that person is operating their finances elsewhere, which takes a bit of time. But with the credit bureau, if we have all the information in one space, it makes it quite easy for us now to get that data, and of course with the customer's consent. In terms of cost, what it will cost a little more, and I say a little because for a credit report, the fee is $32.40. That's what it is now. That's once the customer has loans elsewhere. If it is that the customer doesn't have any borrowings, it will just be $8.10. So it's a very small fee. So in terms of the cost to the customer, it would not be a significant increase in fees.
And Ms. Phillip, if I can bring you in at this juncture, when we talk about credit bureau and how we're going to be changing the mode of operation of our business in terms of how we onboard customers for their loan facilities and their requests, how do you see the education and component that the banks and the non-banks will have to engage now with their customers? Is this a challenge? Do you see that as something that is going to be significant to inform your customers that this is starting in August and the mode of operation now in questioning you to get a loan is going to change? And as Mr. Joseph indicated, a little more cost. Do you see that as a major challenge, or is it something that you guys are going to be preparing to do?
Well, I don't see it as a major challenge. A few months ago, the banks did advise customers by placing notices in all branches that we are now obligated to report their credit information to the credit bureau. So those notices have been up for a while. And so the knowledge, I think, has started to seep in a bit. Right now, when you apply for a loan, you don't give consent to contact a bureau, but you do give the loan officer consent to perform a credit check on you. So in terms of the principle of a credit check, that doesn't really change it will not change from what we have now in terms of the process. But I think the education that we're doing tonight, starting with tonight, will help in terms of educating customers that this is now the way that credit processing will be handled by banks and then eventually other financial institutions, so that over time people get accustomed to that process and the principle, as Olin referred
sorry,
to.
Ms. Phillip, just to push back a little here, I think the major issue for the average customer is going to be the confidentiality issue of the sharing of the data, and as well the securitization of the data. As Mr. Reinders indicated, that a lot of money and time has been spent in that. How do the institutions, the financial institutions, plan to deal with that? Because we are going more digital with our banking. Just now, we may not have a loan officer to meet with because a lot of this loan work is going to be digitized, and you could apply online to get a loan and so forth. So the question becomes, is the financial and non-bank financial institutions part of the security arrangement for the credit bureau? And if that is so, what is going to be the challenge to the banks when people push back and say, I don't want to share? Mr. Reinders did indicate that you have to agree to share your information. What is the bank going to tell a customer, that you cannot get a loan because you're not agreeing to share the information because they're worried about confidentiality and security?
Well, I'll let Van come in on the security part, but the consent is not to share your information with the credit bureau. That is mandated by law. The consent is to pull a report in your name. So that's the difference.
Okay, so basically,
the consent that you're giving is to pull a report in your name. And if that you're okay with that, then we proceed to pull a report. If you're not, then we cannot, because we need to have proof that you have given consent.
And what about the confidentiality aspect? How are you going to assure customers that this information is going to be kept confidential throughout the process?
I'll let Van handle the confidentiality.
Van, yes, you could come in and talk about that.
Yes,
go ahead,
maybe
Van.
just jump in on two bits there. So, Ms. Phillip Frank made a very important point earlier, and is that from a financial institution's perspective, nothing really changes, because institutions are already doing credit checks. When we apply for credit, that institution needs to answer three things. Who is this borrower? Can they afford to pay me? And are they going to pay me? And so what they then do is do the manual checks. So they send emails, make phone calls. And so they do credit checks, and we give them consent to do that. And so that information that they gather, they then compile into a manual credit report, so to speak. So what we're essentially doing is we're automating that process, streamlining that process for them to make quicker decisions and more informed decisions about whether they're going to give credit, what the interest rate potentially could be, what the size of the loan would be, is there a requirement for collateral, etc. So they're able to make that decision a lot quicker. So nothing really changes in principle other than it's being automated and being a lot quicker. All institutions will comply with the confidentiality standards that they have currently. They have to comply with central bank prudential standards, data privacy legislation, and of course the Credit Reporting Act. So there is this whole framework of compliance that the financial institutions and the credit bureau have to comply with in terms of confidentiality. And then of course consumers can see who has done credit checks on them, because consumers have the right to view their own credit report. We'll talk about the My Every Data app in a minute. And whenever someone does a credit check on you, it leaves a footprint on your credit report, meaning that if you check your own credit report, which is free of charge, you will be able to see who had access to your report. And you will know if I applied with Republic Bank or with a credit union and gave them consent. And so there is a way to see that. And there are very strict non-compliance penalties, up to 100,000 EC, I believe, per infringement from central bank, and even potentially the loss of our credit bureau license. So we are very strict to make sure that there is consent in place to view the information.
And before I bring in,
I don't want to dwell on that too much, but
Mr. Campbell here, I have one more question for you for the time being. Is this going to expand to companies, big business companies that have a high receivable portfolio, and they need to assess the quality of their portfolio and to say to a customer X, listen, I need to get your credit rating before I could extend credit to you, so I'm assured that we could improve the quality of the portfolio. Is that something that is envisioned when we launch? I'm taking it now outside of the bank and the financial institution. So, for example, Jonas Brown and Hubbards as a company would have a high receivable base. Would they be able to ask customer X for their credit rating score so we could assess them?
Is that question aimed at me?
Yeah, anyone could answer that,
Yes,
Van,
yeah, sure.
yourself or
Yeah.
anyone. I mean, but yeah, you could take it. Go ahead.
Yeah, sure. Pardon. If I understand your question correctly, no, the information is used within permissible purposes by the Act. So there's a very strict framework what we can use the information for. So yes, a financial institution could potentially say if they want credit reports on the directors before they give credit to a commercial company, for an example. But as a credit bureau, we will not necessarily be able to screen a company's customer base and provide information on that because it falls outside of the permissible purposes as defined in the Act.
So this is only going to apply primarily to the financial services sector?
Correct, yes.
Okay. Byron?
Yeah, thanks, Chris. Good evening, all. And this question is directed more to either Ms. Phillip or Mr. Joseph. Clearly, here's a situation where a new service is coming on stream of a credit bureau. It means that customers will be screened. The screening will be more thorough. The banks and other financial institutions would clearly know the status of this person's credit situation based on the data that would have been supplied by the banks and financial institutions to the credit bureau. Tell me, from a banking sector perspective, how do you see the credit bureau benefiting borrowers? We understand clearly how it benefits the bank. It's a safer loan. They know the person better. But how does it benefit the borrowers?
Right, so it benefits the borrowers. Firstly, because the process for getting your loan assessed and hopefully approved will be shorter because the process of having to call around to other financial institutions to confirm credit and performance of the credit will be, you no longer have to do that. Secondly, I think it's a quite empowering thing to know what your credit score and your credit status is as an individual. It gives you more bargaining power, I think, to be able to say to an organization, well, my credit score is a positive one. It is within a favorable range. And so therefore, I believe that, I'm a credit-worthy customer. And I think that's an empowering thing. So the knowledge, as an individual and as a company, in the case of companies. And then secondly, the process for acquiring a loan should be cut down significantly.
Maybe add on there a few things as well. So really what the Credit Bureau does, it reduces the barriers of information for financial institutions. As I mentioned earlier, if we resolve the challenges with the lending with financial institutions, there are benefits to the consumers. And so, for an example, we've significantly reduced the time it takes because the assessment happens in real time and not in a manual process. Financial institutions can do a much quicker affordability assessment because they can really easily assess the total exposure of the consumer. And so what they will do is they can easily factor in affordability as well as risk. So there could be potential things like a reduced interest rate for customers with a good score. There could be a reduced demand for collateral because you can use your good reputation as a reputational collateral. If I have a history of honoring my financial obligations, when you apply for credit and the institution can see your good credit score, they are far more likely to give you the credit that you need and also price in their risk. So maybe the interest rates will come down, less demand for collateral. There is a fair assessment on your application as well. And so it's not based on bias or perception. It is very clear. This is my credit report. This is my credit score. I qualify for it and I can afford the loan. So I should get the loan, and it's not up to the assessment of the person that's doing the evaluation or a subjective assessment, right? So there are multiple benefits that benefit the consumers by solving this data information issue with the bank. We call it asymmetric information with a financial institution. So there are a range of benefits to consumers, but the time is being a big one, right? We don't want to wait 3 weeks for a loan or a week for a loan. We want it in real time. And we actually have solutions that we will be presenting to institutions to give credit in real time, meaning that we automate the decisioning. And I think it was Mr. Campbell that mentioned that earlier, or Mr. Chris, if it was you.
Yeah.
Essentially what that means is you should be able to get credit in real time. If you go onto your bank or your microfinance or even your credit union application, even after hours, if I say I need 2,000 US now, you should be able to apply and click and get it in your bank account in real time without having to get the manual intervention. And we have the technology to do that. Now, institutions couldn't do that before because of a lack of information. Now that they have access to that information, the technology is there to put these kind of products in place. And that, of course, has tremendous benefit for the consumers, right? Because you'll have access to credit, affordable credit and responsible credit, even after hours if need be.
There's always concern about what the banks are doing. Essentially, they are harvesting your data, and they are making it available to the credit bureau. And the question of security and what data specifically would be transferred, would be made available to the credit bureau. Give us a little more detail on this, because that's important. Consumers want to know, are they sharing my address? Are they sharing my marital status? What exactly, tell us a bit more about the specific data that are likely to be shared or that will be shared with the credit bureau.
Yes, of course, a very great question. I'm glad you asked that. The Credit Reporting Act very specifically defines what may be shared and what cannot be shared under no circumstances. We focus only on personal information. That would be your NIS number, your passport number, so any identifier information, driver's license information, etc. First name, last name, date of birth, so any identifying information on your person. And then also credit-related information only. And that is on current contracts, plus historical contracts, open and closed contracts, dating back to 7 years. Meaning that we cannot display any information that goes more than 7 years back. And that is both positive and negative information, as I mentioned. We do not collect any information, like sensitive information, like your medical history, your religion, any non-related information that's not non-credit related. We may not collect, we may not display it. So there is a standardized data template, and all institutions submit exactly the same information to the credit bureau.
There's concern, and this question could go to the bankers, of course, either one can answer it. There's concern that credit bureaus, and this credit bureau here, might marginalize the financially vulnerable. What safeguards are in place to prevent discrimination or profiling, so to speak?
Okay, so if I were to answer, the information that the credit bureau has is basically your credit history information. So it will not marginalize anyone. If ever someone has to be marginalized, it comes from a personal bias, either by a loan officer, maybe biased by the institution. But here we have both the financial institution and the customer can access the information. So the customer can access the report and they know exactly what is shared with the credit bureau. So they expect the bank or whichever financial institution to receive that same report. So once the report is a positive one, then customer is more than likely to qualify or the loan will be approved. Even if the report is not so favorable, as Van said, it goes back to 7 years, maybe 6.5 years ago, the person had some challenge. So, and now the situation has changed. As bankers, we have what we call mitigating factors. So it's a holistic assessment of the customer, and no personal bias would be used, no marginalization will take place. Once the report is satisfactory, if there are negative things that we can mitigate, that person rest assured that their credit will be approved.
And there's a follow-up question. Again, it's open. Could this new system help to, I'm thinking about improved credit access for underserved groups. And here I'm talking about small farmers, youth entrepreneurs, or informal businesses. Could it any way improve credit access to these groups?
Yes, absolutely, and that's one of the things we pride ourselves as a credit bureau is to remove the barriers of access to credit. Now, what we see, for an example, I'll give you an example here, is currently, say for an example, if I built a history, I maybe don't have formal credit with a financial institution, with either with a credit union or a commercial bank, but maybe I have borrowed from a small microfinance and I've built up some history within there. I have a small farm. I need to buy some farming equipment. I need some SME funding. If I were to approach a commercial bank right now, they may not give me the credit because they don't know me. They don't know my affordability. They don't know my history. Now, with the advent of a credit bureau, that the smaller microfinance and the credit unions will be sharing their information with the credit bureau, and that is compiled into a credit report, which is your history of how you've conducted yourself over the past 7 years. Now, when you apply for credit even if it's a new account with a commercial bank or a credit union or a microfinance, they'll be able to pull that credit report and see your history, and they'll be able to use that as reputational collateral. And so it's easier to transgress or to move up in the formal financing sector because there is a reputable way for institutions to assess your risk and your affordability, which wasn't there before. And then so that breaks down the barriers of access to credit. Even if you're a brand new customer with a bank or a credit union or an institution, where historically they may be limited in what credit they can offer you because they don't know you. You first have to build up a reputation with them. Now they'll be able to see right from the start, you're a good payer, you've conducted yourself well, you can afford the credit. And without, so it's easier to move up into the products and loans with an institution without having to build that reputation with them over a long period. Because there's this trusted way of assessing the risk and pricing in the risk into their credit.
Well,
I want to just quickly jump back on one point that Mr. Joseph was mentioning there, and I think it's an important point, and it ties back to your question, Campbell, is that the credit bureau does not tell an institution they may or may not give credit. We simply provide them with the information and a credit score saying, based on the information that we have, this is what the credit score is, this is what we predict the probability of default is going to be in the future, and it's entirely up to that institution to give credit, yes or no. So for an example, if there is in the times of difficulty during COVID, or if there's a natural disaster, we understand that people there might be, it's not their willingness to pay, but it's the ability to pay that might be a challenge. And so even though the credit report might show that there is a default, the financial institution can look at that and assess and say, well, we understand what your circumstances are. We have a reputable way of assessing this, and we are still going to give you the credit. Maybe they'll reduce the loan amount, or maybe whatever the case might be, but they'll still give the credit. So we don't say yes or no.
What role would a credit bureau play in promoting financial literacy and helping people understand credit scoring? But I also want you to tell me to what extent AI would be incorporated in this credit analysis.
Yeah, this leads to a very important point, and it's very relative to the conversation with the viewers here, is where every data is different to the average credit bureau, and what we're pioneering here in the ECCU is that, generally speaking, a credit bureau is B2B, so we deal with businesses, and it's very difficult for consumers to get access to their credit report. Generally, you have to pay for it. What we are implementing here in the ECCU is something called My Every Data. It is a consumer application, meaning that consumers can get access to their own credit profile, verified and secure, so nobody else can see your information, but you have access to your own profile, free of charge, as many times as you want during the year. So you have full visibility as to what information is registered on your profile, and if there is any negative information or information that you feel is incorrect, you're able to look at the information and dispute it through the application as well. So if I know I'm going to go to Republic or to Grenada Co-op or a credit union and I'm going to apply for credit, before I go and apply for the credit, download the application, look at your credit score, make sure that the information is correct, it's free of charge. And if there's incorrect information, dispute it. We under law have to correct that information within 15 days. So there is a protection mechanism there to protect the consumers. If you're happy that your credit score is correct and your credit information is correct, then apply for credit with the institution. So you know that when you apply, there is no back and forth about the information on your credit report. Also, a very important point there is that if, in the unlikely event that the institution denies your credit based on something that's on the credit report, they are obligated under law to show you what that is. They have to provide you with a copy of your credit report and say, because of this specific record or entry, this is why we think there is an issue. If it is wrong, please correct it or dispute it. And they have to do that. So there's full visibility for the consumer on their own credit profile, right? Not visibility for everyone. But the application has also got facial biometrics. So when you register, it uses facial biometrics to make sure that you are the correct person that's assessing your platform.
And the AI
to
question.
come back to your question about, yeah, go ahead. Excuse me, I spoke over you there. Go ahead.
No, I was just asking to what extent AI will be utilized in your data analysis generating reports.
Yes, so generally speaking, right now, we are playing to some extent with AI scoring and implementation AI into what we call alternative data sources. But for the most part, right now, we're focusing really on the credit information reports and basic behavioral scorecards, which is it's a standard scorecard. It's very similar to what's being used in other countries, so it's nothing bespoke for ECCU, for an example. But it really just uses the variables like your stability and your addresses and telephone numbers and credit information. Do you honor your obligations? If there is a default, how frequent are they? How severe are they? And how recent are they? So very basic credit scoring based on trusted methodologies. And yes, in the background, we are obviously looking at the future and where the industry is moving. But for the ECCU right now, we're focusing really on the basics.
Okay, Chris.
So I have a question for the bankers primarily, and this is to deal with, if you have a credit rating score coming from the bureau that says you're marginal, so you're not high, you're not low, but you're marginal. And I heard about the reduction of subjectivity in assessing a loan and to be able to respond to the customer from a more objective point of view. Do the bankers see this as creating or affecting the competition between themselves, primarily the banking institutions versus the credit unions? Or do you see it as helping more so than creating competition that may be, for want of a better word, destructive? This is for the bankers.
I think once you have asymmetrical information, then that's where you have a competitive edge over the other institution. Once we have equal access to the same information, that removes that bias and that competitive advantage. So in terms of the playing field being level, because we have access to the same information, that is how I would answer that question. I would, Golden may have a different spin on it or a different response, but I think the competitiveness would have to be in different areas because now the information is standard and we all have the access. Once we have the consent, we have the same level of access.
So before Golden answer, Golden, let me throw it out to you further. If you fall in a gray area in terms of your credit, your score, the institution, as Van indicated, they are not telling you to approve the loan or not approve. But you as an institution, based on where you want to see your loan portfolio grow, you may say, okay, for the ones in gray, I may take the risk of giving them a loan based on what the credit rating is. Do you see that as improving the competition among yourselves? Excuse.
Right. I would say yes, because the customer may fall in a gray area, but it's still left up to the institution. So we would have to dig a little deeper to find out why. Mm-hmm. Because good loans go bad. Some loans start off bad, but good loans go bad for various reasons. And obviously, if the loan goes bad, it will affect the person's credit rating. So if there's a gray area, we will have to dig a little deeper, see if there's anything improving with the customer, see if there's anything we can mitigate. If there's not, then probably we just won't go with it if our risk appetite is not in favor of it. But as Carleen said, it sort of levels the playing field when everyone has access to the information in real time. And I can probably give you a further example. Now, a customer may be upset with an institution for, it could be a simple reason. Maybe they came in, they were not happy with how they were spoken to, and somebody in another institution spoke to them well, and they say, you know what, I think I'm going to move my business. Now, they want to move their business, but they ask the institution for a printout. The institution would then try to wow that customer, try to retain that customer, try to keep them because they don't want to lose the business. But when you have the credit bureau now, the customer can walk in and the institution, with the customer's consent, can request the credit score, the credit report. The playing field is level. No one institution has an advantage over the other. Whether it be a gray area or not, all of us have the same access or the same information at hand.
And this will apply to small business, as Byron indicated. I'm a micro business in some part of the country making pepper sauce, and they want to come to you for overdraft facility. It will apply to them as well?
Yes, because a small business, well, essentially a sole trader. So the customer, the sole trader, is the business. So whatever borrowings would be on that sole trader's name, so his information would be at the credit bureau as well.
Okay.
Who oversees and regulate the credit bureau?
ECCB.
You can tell us that, because I know we are aware of what I think it's Act 22. It's a credit reporting, and this is to provide a fair and accurate credit reporting system within the financial system. But how will ECCB, not ECCB, but how would the central bank manage the bureau? What is the mechanism? What is the relationship?
Van, you can answer that,
Yeah.
but I mean, in reading the acts,
Yes,
I know it's
absolutely.
very detailed there.
Yeah.
Yeah, absolutely. So there are multiple stakeholders really. So the central bank, ECCB, based in St. Kitts, of course, is the initiative owner, and they regulate the commercial banks. And so the commercial banks and the credit bureau and the central bank are all regulated within this regulatory framework under the supervision of the central bank. However, at Grenada level, at country level, there is also, of course, other regulators such as GARFIN, the Grenada Authority for Regulator of Financial Institutions. They oversee the credit unions and, of course, microfinance, and they have full authority to enforce the legislation locally as well, or nationally rather. And so there is the cooperation between the national regulators and the central bank. We as a credit bureau, of course, regulated by the central bank. We get audited by the central bank, and so they supervise the initiative.
I just want to know, is there a regional integration aspect? I know so far you talk primarily about Eastern Caribbean. And also, just a follow-up part of this, because a large sector of our of banks' customers are in the diaspora. They're in the United States or they're in England. Would you be able to access because information from extra-regional sources?
Yes, to an extent. So if the credit is issued by a Grenada entity, they will report that institution, even if the borrower is in diaspora outside. But as far as information sharing is concerned, there are very strict cross-border regulations, meaning that we cannot give any institution access outside of the ECCU. What is possible is, for an example, if a Grenadian moves to another country in the ECCU, St. Kitts or Antigua, for an example, and applies for credit with an institution there, they will be able to have access to the Grenada institution. So under the ECCU framework, that is possible, but not outside of ECCU.
Okay, bottom line for the local bankers here, because we are running out of time here. What do you want to say? What is your word now to your potential borrowers now that the credit bureau, as of next week, will be
Launched.
It would be a matter of fact. What is your advice? What is your message to your local customers now?
Who wants to take this? Many other
Any one
bankers
of
could
you.
take
Yeah,
it.
any other bankers could take it. Sure.
Go ahead, Goldie.
Okay, I can go. Right. So the credit bureau just makes credit check easier for you. It makes your credit application time, the turnaround time quicker. So there's nothing new really except the time, because as it is now, when you apply for a loan, you sign for us to do a credit check, which the bank usually does. It takes a little longer, so probably that's why sometimes we don't get back to you right away as the time that you would want us to. However, with the credit bureau going live on August 1st, it will make things quicker, easier for you. The same information that's in the bank is the same information that the credit bureau has. Your data is protected. The bank is responsible, and we operate under strict integrity. So there's no sharing of information with anybody else that we should not have to share with. So rest easy. It's not subjective. It's more objective than anything else.
Ms. Phillip, would you want to add anything to Mr. Joseph's statement?
Certainly. I'll just encourage the bank's customers to get educated on credit bureaus, get educated on credit scores and the credit scoring methodology that's generally implemented or in use right now worldwide. To just become more familiar so that you're more empowered and more informed when you approach your bank, to have to ask questions, to ensure that once you have access to your credit information through the app that Van mentioned when that goes live, ensure that you check your credit information so that it reflects what you know to be the truth. And if that is not the case, you raise a dispute using the channels that are available. But the main thing here is to get educated. As Golden said, nothing really changes in terms of the principle of a credit check. It is just now more objective, more symmetrical in terms of the access that institutions have to the information. And nothing is different from what is in the bank. So it is not anything outside of what you should know and what the bank has as your credit data.
Thank you. Van, you have your final closing comments on your operation starting next week. Final comments, please.
Yes, we just want to say to our viewership here that the Credit Bureau is looking forward to bringing the Credit Bureau to Grenada. We endeavor to be transparent and to give consumers access to that information through their application. So keep an eye on the media as to how to access your own credit profile. And we're enthused to bring this to you. I think it's going to have tremendous benefit to you as consumers, and so it's really something to look forward to. From my side, that's all for now, and thank you for the opportunity.
Chris, closing comments. Yeah.
Thank you very much, Van and Golden, Mr. Joseph and Ms. Phillip. I think and I believe that this is going to be a positive thing for us in the sphere of the financial services. It's going to reduce the possibilities of customers jumping and going out where the institutions are going to be robustly now implementing and hopefully reducing the NPLs based on credit checks and what is happening. So I think it is a positive thing and something we've been waiting for in the OECS region and ECCU for a little while now. So let me wish you the best on your launch on the 1st of August and hope that everything goes well.
Thank you very much, all. And viewers, remember that Friday is Independence Emancipation Anniversary. It's 191 years, Chris. Not a long time. Not so long, 191 years. So there are celebrations and there are a lot of...
make progress on reparation?
Well...
Don't answer that. Don't answer that, no.
We need it though, Chris. It's urgent, and that this issues continue. Reparations. I mean, the estate owners they got billions. They got a lot of money. The slaves, we got nothing. Viewers, we'll see you next week, same time. Let me thank MTV technical staff and management. We'll see you next week, same time, same place. Bye bye.